Have you ever actually stopped to wonder? If we deposit our hard-earned savings into a regular bank to keep it safe, where did those banks go when they need money? Like, who exactly banks the banks?
Welcome to The Explainer. Today we're taking a big step back, resuming way out from your everyday savings account in your personal wallet to uncover the ultimate boss of the entire financial system. We're going inside the central bank. Here's our roadmap for today. We'll hit the basics of banking, define what a central bank actually is, look at its main jobs, put a spotlight on the Nepal Rastra Bank, and finally, do a quick showdown between central and commercial banks. Let's get into it.
Section 1. The Basics of Banking, where it all begins.
It's beautifully simple at its core, right? A regular bank is really just acting as a safe middleman. It connects people who have extra money, your savings, with the people who actually need that money for loans.
So here's exactly how that works in real life. Let's say you save 10,000 rupees. The bank doesn't just lock that cash in some dusty vault. No, it lends it out to, say, a shopkeeper in Bhaktapur who wants to expand his business. The shopkeeper pays the bank interest for that loan, and in turn, the bank uses a chunk of that to pay you a little interest on your savings. Everyone wins, and the economy just keeps moving forward.
Moving on to Section 2. What is a central bank? The boss of banks.
In Nepal, this supreme guardian of the financial system is the Nepal Rastra Bank, or the NRB for short. But here's the catch. Unlike your local neighborhood branch, you and I absolutely cannot just walk through those doors and open a personal savings account. It is strictly closed to the general public.
So what actually makes it the boss? Well, for starters, it's completely government-owned, and it operates as the sole currency issuer, literally the only place legally allowed to make money. It offers zero public services. Instead, it acts as this massive traffic police, regulating all the other banks to make sure everybody's playing by the rules. And ultimately, its main goal isn't making a profit, it's maintaining economic stability for the entire country.
Section 3. Jobs of a Central Bank. It's about a lot more than just money.
First and foremost, it holds the absolute monopoly on issuing notes. Only the central bank can print physical currency, like those 1,000 or 500 rupee notes. If literally anyone else tries to do it, it's a massive crime, forgery. But they don't just leave the printers running 24/7. They have to print exactly what the economy needs, otherwise prices would just soar completely out of control.
Beyond just printing money, it serves two giant VIP clients. First, it acts as the banker to the government, keeping all that tax revenue safe, paying the government's bills, and managing public debt. Simultaneously, it's the banker's bank. It requires all commercial banks to keep a reserve of cash tucked away with them and acts as the lender of last resort. Meaning, if those local banks ever face a serious crisis, the central bank provides the emergency loans to bail them out.
To really put the sheer scale of this institution into perspective, we're talking 10 to 12 billion US dollars. That's billion with a B. The NRB manages this massive sum in foreign exchange reserves. And this huge reserve is absolutely critical for foreign exchange management. Think about it for a second. When you buy a brand new mobile phone that was imported from China, Nepal actually needs foreign currency to pay for it. The NRB manages the country's whole stock of foreign currencies to ensure there's always enough Chinese yuan, Indian rupees, or US dollars on hand to keep international trade flowing smoothly. All of this builds up to their single most powerful tool, monetary policy. The central bank basically acts as the engine driver for the whole economy. If things are slowing down, they use an expansionary policy. They lower interest rates to make borrowing cheaper, which encourages businesses to take out loans and boost growth. But if prices are rising way too fast, they hit the brakes with a contractionary policy. They raise interest rates to slow down borrowing and spending, effectively cooling the whole economy down.
Section 4. Nepal Rastra Bank Spotlight. Let's do a quick history.
The NRB has been around for quite a while. It was actually established back in 1956 or 2013 BS. However, it gained its modern, robust legal foundation through the Nepal Rastra Bank Act of 2058 BS, which was the year 2002. This specific act legally cemented its status as the autonomous, absolute sole monetary authority of the nation.
Let's run through some quick facts. The NRB operates out of its main headquarters over in Buluwatar, Kathmandu. It is 100% government-owned and headed by a board with a governor sitting right at the top. And perhaps their most high-stakes, delicate daily task? Target inflation. The governor has to try and keep the country's inflation perfectly balanced, hovering right around 7%.
And finally, Section 5, Central versus Commercial Banks, the ultimate showdown.
As you can see, the differences are literally night and day. In terms of ownership, the central bank is completely government-owned, while commercial banks are your typical private or public companies. What about their purpose? Well, the central bank controls the money supply and regulates the system. It's a public service. Commercial banks, on the other hand, exist primarily to make a profit by lending out money. And their customers? The central bank strictly serves the government and other banks, while commercial banks are everywhere, ready to serve the general public. You know, you and me.
Now, when it comes to operational limits, who can actually issue currency? For the central bank, it's a resounding yes. Only they have the legal right to print money. Commercial banks absolutely cannot. What about accepting public deposits? That's a hard no for the central bank, but a definite yes for commercial banks. And finally, there is only one central bank in the entire country. Meanwhile, there are many commercial banks. In Nepal alone, you've got over 20 of them competing for your deposits.
Which really leads us to a final lingering thought here. If inflation is too low, businesses don't grow. But if it's too high, ordinary people suffer because everything just becomes way too expensive. So what happens if the central bank fails to find that perfect balance? Well, every single decision the central bank makes trickles down through those commercial banks to eventually impact your very own wallet. So next time you see prices change at the local market or notice interest rates shifting on a loan, remember the boss of banks working tirelessly behind the scenes. Thanks so much for joining me on this explainer, and keep questioning how the financial world around you actually works.